This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what we're going to do today is answer some questions. I've gotten a number of different types of questions related to the Fibonacci retracements, multiple time frame trading, understanding how to identify entry points that might be a little bit more on the aggressive side. Okay, so we're going to put all this together, and I'm going to show you an example in Apple of how you could have recently been more aggressive on your entry point. So we're going to do that. Now, if you want to learn some of these techniques in terms of multiple timeframes trading, I would suggest starting with the book. You can go to rabilstockresearch.com/book for more information. Also, if you enjoy this content, please hit that like button and also subscribe. So I've got my charts up of Apple. All right. It's a grid. It's the same time frames. I've got a monthly here, bottom left, bottom right is a weekly, daily upper right, and an hourly in the upper left. Now, what I've done different is I've taken off the MACD and the ADX. I just have the volume at the bottom, and I do have the moving averages up, the 18 and 40 simple moving averages on all the time frames, but I also have overlaid the zigzag. All right. Now, let me just show you this so you can see. Wait a minute. Zigzag. All right. So I'm using a percentage of 5. I've got it set to auto percentage. This is for anyone using stock charts, ACP. All right. The multiplier by default, if you bring up the zigzag, will be 2.5. I have switched it to 2, and I use the high and low. All right, off the close. And so that's basically how I have this set up. Now, the reason why I switch this from 2.5 to 2 is I'm based on my style and what I'm trying to do when I'm looking for multiple time frame confluence. I need a little bit quicker reactivity in the swings. I need a little bit more aggressive reversal points than the 2.5. All right. 2.5 is a pretty good standard average true range move off of a low. That's what Linda Raschke uses. I don't have a problem with that. And the way she has her multiple time frames set up, it makes sense to me that she's using 2.5. But for me, in the setups that I use, it is really, I think, worthwhile to use the 2 as a reversal point, as a multiplier. All right. Now, let's just start with this monthly chart. We can see we're looking at a longer term uptrend in Apple, and it had this pullback back towards this 200 area. Now, we want to look for confluence. If we're going to be an aggressive buyer near support, we need more than just price support. You know, we can't just be looking at one thing. If I'm going to play it more aggressively, I need to have other aspects that are telling me, other indications that suggest that there's a pretty high probability we're gonna move back up. All right. Number one, we've got a rising 18-month line right underneath this 200 mark. All right. Now, not only that, do we have a rising 18, but we have a rising 40 right underneath it. So that tells me we've got a decent trend in place on this time frame. Now, I'm not even looking at the momentum indicators. All right. But I can see that the volume really doesn't look that bad. It's not like it was violent selling as it came back towards this 200, just under 200 mark. And again, came very close to the 18-month line. All right. Now, that's trend support on the monthly. Trend support. Trend support means I'm getting a pullback towards a key moving average. And a lot of times that'll define price support, but price support is a little bit different. Price support is where we can look at 2 to 3 level reversal points, right, at the same level. All right. And so I can see we reversed here to the downside. We reversed again here. So once I see that, I can draw a horizontal line at this level. Now, we did get a third just underneath the 200 mark, but I know basically right in this zone here is a pretty important area to be watching. Now, that is separate from trend support. So we have on one time frame given us one piece of information, and then we have another time frame giving us another piece of information. So we have trend support on this time frame. We have price support on this time frame. It doesn't hurt. We have trend support too. You notice how we have a rising 18 and a rising 40. This is multiple time frame confluence. This is what we're looking for. We've got a lot of information sort of suggesting that this 200 area, not an exact level, but the 200 area is likely to find some support. Now, the other thing I would point out is that look at what's taken place. You see the lack of volume in this decline? There wasn't a lot of volume associated with this drop. That was a sharp drop, and it didn't really lead to a lot of heavy volume. All right, so we've got all that in our back pocket. These are the bigger time frames, and we're not trading off these time frames, but we're going to use that to our advantage. Now, there's two other aspects to this trade that will, or this setup, that will allow me to go down to the small time frame hourly and be more aggressive. All right, one of the things I'm looking for is our classic A, B, C decline. All right, that is where it's a corrective pattern and not necessarily a reversal. Now, this is really important, your understanding of this. This is right out of my course. I don't go into this in the book because it's too in depth, all right? You will find that the courses have a lot of detail in them. But I've got this decline here and then a rally up, all right? So this is a key low. If you notice, when we drop from here, we did not take out that low. All right, we went to a higher high, but we did not go to a lower low. As a result, this now becomes an ABC corrective pattern. So I'm looking at it as a move down, a rally up, and a move down, and that's it. It's no real reversal. A reversal would be is if we go and we turn down through that low, come back up, make a lower high and a lower low. The other way you could do it is if you made a lower low like this. First you made a lower high, then you make a lower low, then you make another lower low. That would be your second lower high, second lower low. That's another way to reverse the pattern. So we don't have either one of those in place. So we view this as a ABC correction into trend support, into, price support, into trend support. It's actually both trend support and price support based on the moving averages, and then trend support on this time frame. So we've got one piece of information, we've got another piece of information, we've got the ABC, that's a third piece of information, we've got the light volume, that's 4, right? That's 4 different little indications that suggest, hey, this is starting to get pretty interesting. All right, now look at what we want to do. Off of this bottom to this top, and I drew it on this time frame so you could really see it, from this low to this peak, we do a fib retracement. Now what we're looking for, and I don't know why, I must have gotten rid of the 38% retracement, but I want it to be inside this grid. This would be the 38%, 50, and 62%. So we want to see the reversal come into that zone, right in the area, preferably right in the area of the 50%, which is essentially what happened here. If we have that, combined with the fact that it's an ABC correction, combined with the fact that we have trend support, price support, all right, and light volume on the decline phase, then I can now go down to this small time frame and look for entry. Now, I wanted to show how we use the swings. This is how my subscribers have learned to use the swings. I think this is really important. If you notice, this went to a higher high on the hourly. In fact, I want to zoom in on this for a second. So we know we've come down into this zone down here. We've come down into the zone. We know we've got trend support on the monthly. We've got price support on the weekly. We've got a ABC correction on the daily, and we're coming into the fib retracement level. All right, we're coming down into this level. So what I'm looking for is price is going to give me the first indication that we've got a reversal in place. And if you notice what happened, we went to a new high on the swings, went to a higher high here, and then immediately to a lower low. All right, so that's bearish. We went from a new high to a new low. That is a bear alert. Bear alert. All right, the moment we go to a lower low after a higher high, remember, we're looking for this pattern. So that's a bear alert. And then when we rally up, we're on the lookout to see if we do something like that. Well, if you notice what happened, that is not what we did. Instead of going to a new low, we went up, we came down and tested just like this. All right. And then when we turn back up through this prior high, that is actually a failed bear. All right. This is a bearish pattern. And now we have a failed bearish signal. Now, if you notice, we went into the zone and we found support at the 18 as we were trying to come out and then turn back up with a green bar, big green bar crossing up through that level. All right. So I know this is a really key level. All right. You want to know that. I also know that we came back up through the 18 and the 40. We also have a big green bar. Do you see how all this information, this is all information that I'm getting without the use of any indicators. I'm not saying not to use the indicators. What I'm saying is that the majority of this setup has come from looking at price support, trend support, fib retracement, knowing that we're looking at an ABC correction on the daily chart, and this is just a simple pullback. So that's essentially a pullback in an uptrend, and this is a corrective pattern, all right? And then we also know we have lighter volume. We have this fib retracement zone, and now we have a failed bearish signal on the hourly. I can get long as this comes back up through this low. And I can also know that if you go through my course, you'll know that this pattern is what I call a spike and ledge. All right. And it is crossing back above this peak as it's coming back above the breakout point at the same time. So this is a spike low followed by a ledge coming back up through would be the buy signal. We've got multiple reasons why this would have been a decent buy pattern somewhere around that 212, 215, something like that. Now, in this instance, because of how far it was off the low on the daily, my suggestion would be to take the risk off the hourly, meaning when we put this trade on, use hourly risk, use maybe the last key low on the hourly as your stop out point so you can keep the risk down. And if it's going to turn in this situation, it's just going to go. It's not going to hang around down here. It's not going to fiddle around. I think it's the type of situation you're coming into a key level. You should get a strong retracement pretty quickly. So anyway, these are how to put some pieces together that can give you a pretty strong evidence using multiple time frames to get you really good entry on a sharp downside reversal pattern.